Hey traders, just wanted to change things up and look at golds today first, and then I'll look at Bitcoin too. But just wanted to show you something we've been looking at. This is why you should watch the streams. If you're not a stream viewer, what are you doing, man? All right. So Bitcoin, or sorry, golds. It broke out back in late June, right around the time Bitcoin was about to correct. Gold was taking a huge breakout of a complex slanted inverse head and shoulders. This is my first static video I've ever done on gold, by the way, so be gentle. All right, so once we broke that neckline, there really was no resistance until 1525. We've hit that. We actually upthrusted. An upthrust is what we just call pretty much a false breakout, where you attempted to break out, you could not sustain prices above that critical area, and you have fallen back down. All right, so we're going to zoom in on it, but this is just what you should see. I mean, this goes all the way back to August 2011, October 2012. That is your momentum shift trend line, and we did eventually finally break that July 2017 and stayed out. All right, and so that is one way to signify momentum shifting, is by seeing those geometrical trendline breakouts. But also other ways of signifying momentum shifting is higher lows. And so as you can see, since 2013, we've been making nothing but lower lows until 2015, late 2015, almost 2016, and then we began to make higher lows. And during this time with the higher lows, we know central banks bought up $155 billion worth of golds, and at the same time they only bought up about $10 billion worth of bonds. So that should tell you, what they're thinking. So, and as you can see, with all the accumulation that occurred once you broke a sell wall, once you snapped that, there was no more supply at that price. There was only supply at much greater prices. And as you can see, finally found more supply up here. And if you zoom in, if we've been watching the stream, what's been developing, and it's just a beautiful, now confirmed head and shoulders pattern. As you can see, the yellow trend line, 1525, going all the way back. Where was the date? Was it 2014? 2012, sorry. 2011 and 2012, that resistance, you can see it, how you responded to it three times. One time, here's the up thrust, and here's the attempted rally, right? That lower high than your previous high. Left shoulder, head, right shoulder, slanted neckline. You broke it today. Not much support on the way down until you get to 1444. And the measured move of this pattern, $68. So that could bring you all the way down to $1,418. We'll see if we can get there. We know that's not unreasonable at all, because from our major swing low to high, we know the golden zone is between the 618 and 382. That's 1376 to 1444. It lines up perfectly with just common Fibonacci retrace levels. Okay, so we'll see maybe down there, and this maybe just has to do with the way the macro is going, the Fed cutting rates second time in 2 months. That's good for equities. Good for equities. That's the whole point of why they did it, as a preventative measure. It wasn't like things were really wrong at the time. It was just the Fed is trying to prop up the stock market, the S&P 500, as long as they possibly can. They're trying to keep sentiment high on the stock market by cutting rates, and that's like giving cheaper money to people to use, and they're hoping in good faith people will use that to continue buying assets on the stock market. Okay, so that's not really good for safe havens like gold, silver, maybe Bitcoin, the yen. All right. That's it, man. That's gold. See it maybe down at 1419. This is it. These are how dreams are made. It was beautiful, man. Look at this, man. Look on the daily, like what you got on a high to a higher high. Look how you had almost inexistent levels of positive momentum on the slightly higher high, on the up thrust. Those are things that you can really get good at. You can see there's resistance looking left, and you're showing such severe levels of divergence, and you've just broken a critical resistance. Chances are it won't last when this shows up. All right, so that's coinciding variables. You got a pattern that developed, you hit a critical resistance and you fail to break above it. That's another that's two right there. Divergence on the MACD, divergence on the RSI. That right there should tell you, that's four coinciding variables that are pretty freaking good on a very significant time scale, the daily. All right, let's go to Bitcoin just for a moment. I had to look at gold first. Y'all wouldn't even watch gold's analysis if I did Bitcoin first. So just kidding. All right, cap up. So, it was thought to be, the thesis, what I was thinking, right, kind of played out. It didn't hit exactly where I thought we'd go down to maybe like 7,600, 7,500. We got as low as 7,700. Kind of double bottomed before a bullish engulfing candle appeared. And, this is what I was talking about. I was like, okay, you're doing nothing now. You should sell off more. We were at 8,300 when I said that this weekend, in the weekend. And so we dropped a lot. Just didn't quite get to that look left the support zone before bouncing, and that maybe just had to do with this. Still divergence. I mean, no matter what way you look at it, this is still a form of divergence where you keep making low, lower low, actually technically a lower candle low close with higher levels of relative strength. Heck, from this low to this low, we only had positive momentum. So there you have it. There was a little bit of hidden bearish divergence here, but maybe that's how much it played out. Like $400 or $500, whatever. But either way, you've broken out of this, whatever it is, just some form of consolidation. If you want to call it a descending broadening wedge, you can, I guess. I mean, a measured move is going to put you at 89.95 right there. Yes, it's a sale on Bitcoin, 89.95. Okay, it's like an infomercial. Anyway, so I don't know how far this divergence on the 4 hour is going to carry you. I mean, you'd think in time, like after such tremendous selling, I mean, think about it. You went as low as 7,700 when just, I don't know, a week ago you were at $10,000. So that type of loss in such a short period of time, you'd think there'd be some sort of correction, at least for some sort of square up anything, right? I mean, you can see there's probably, it looks like there's a square up around, I think it's 90, let's see, 60 minute real quick. Yeah, it really looks like that square up is, you could argue 96.74, but also a little bit of chop right here around 94.50. 94.50 is also a resistance zone now. As you can see, we broke it, and this could be an area where we come to back test at some point in the future. But my God, man, you got to think on the 4 hour, just look at your moving averages. You're just, it's terrible. Like, you're so far away from moving averages, and that could, all right, so you just broke above the 20 now, all right, I guess. And, until you break above the 50, you're in the bearish equilibrium zone for your candles, right? Because when you're in a bull trend, you want to be above your 20 and your 50. A lot of times in bull trends, you'll stay above your 20 long enough, and then you'll eventually break it. But that's okay. Sometimes you just run down to test the 50 moving average before running again. And, no, we haven't done that yet. I mean, so it still means you're not out of the woods at all. You need to break that, and then eventually your 20 needs to bullishly cross over the 50, which has not happened, not even close. And look how far away we are from the 200. And as you can see, like that bearish fanning, where you're 20, 50, and 200 once they're coiled. A lot of times that can mean a move's coming at some point, and when the big move happens, you get what's called like a fanning of your moving averages, where they're coiled, and then the move happens on the candles, and they start diverging away from each other. Anyway, so you got to get back above all three of these moving averages at some point if you want to see a reversal. But as it stands now, you can see it. You are in a very well-established downtrend. You are very close to, I think, trend. I mean, this is like your trend is in jeopardy breaking below 7,500, I believe. I think that's like do or die for Bitcoin. I think you falling below that could be terrible. One thing I want to talk about, again, as you've seen in the streams I've done, all right, you're still below the 200-day moving average. That hasn't changed. Good news is on Bitcoin, it's the same analysis I do like every day now, because Bitcoin's movement's just low to high. We've retraced over 50% of the way. You'd say we probably retraced 57% from the lowest point, December 2018 all the way to late June 2019. That's a pretty moderate retrace. As you can see pictured, this is the golden zone. All right, I talk about it all the time if you watch the stream. And if you don't know about my Fibonacci video, you should check it out to get a better understanding of Fibonacci. It's on the education tab of my YouTube channel. Anyway, you're below it, and being below this is terrible, especially when we're talking about history of Bitcoin's bullish cycles, where like let's just say 2015, October 2015 to December 2017, Bitcoin literally never fell. Once it broke above that 200-day moving average, it literally never fell below the 200 moving average again until it was all over, until the correction had begun for real. We're talking like it hit 19,987 or whatever in December 2017. So it would be nice to get back above that and to hold above it, but that's just hopium. We'll let the candles talk for us, see what the price action does. You really need to stay staying above 7,500, 7,200. This is it, man. This is it. There's very little support below you after this. 7,200, 68, then 5,800. Okay, so it's like you just got to think about it like, yeah, it sucks. Bitcoin's dropped so much from its peak, from its buying climax, but you got to know, like, this is just, if you're looking at any traditional market of any asset, these are common retrace levels. You're in the midst of it, so it's really not that big of a deal yet. You start breaking the 61% retrace, that's when things are starting to get bad, okay? Because that's when you're just running out of support. It's pictured here, right? 64.42 is one, and then here you go, 5,800 is the other. After that, good luck. All right. There was the idea that the 886 could be a very good long because of some sort of harmonic pattern, but I won't talk about that in this static video. I'm going to wrap it up, though. So if you did enjoy this static video, please hit that like button, that bell, that sub. Please leave a comment in the description below. Let me know your thoughts on where you think Bitcoin's going. Really appreciate you watching. And so, till next time, respect the TA.